Hello again, traders. Doing here from DRFX, Forex and Trading. Well, we're taking a look at the pattern of movement that I've been looking at on the Australian Canadian dollar daily chart, which seems to suggest that we're going to be forming a consolidation pattern over the next several weeks. This is based on the nature of the bearish and bullish waves that have been formed so far on this time frame, which generally indicate that the market is going to be forming a consolidation setup of one form or the other. For the time being, I'm going to be assuming that it's going to be a pennant, which means that the support boundary is going to be an angled one. And so the assumption for the time being is that the market is going to continue this bearish movement started by this large candle and this normal candle below the uptrend line. And it's going to come down towards this area here before U-turning to form this second support point and complete the formation of this support boundary. Now, taking a look at the 4-hour chart, which could provide us with a trading opportunity. As you can see here, the market has recently given us an evening star formation. This U-turn in the form of this U-turn setup. But so far, well, the nature of this bear candle is not strong enough to justify trading this right now. I would have actually preferred the market if the candle was was stronger, similar to these two candles that created this first setup here. And so what I've been doing is waiting on the market to give us another bearish signal, a stronger signal, and then look to trade that towards our 70 pip trading target. Now, if that signal is given, you're going to assume that the market is going to give a signal like this. Then the next thing is to choose a strong stop loss area to protect the trade as it moves towards this area here. Now, the first possibility is that we could place a stop loss above the resistance boundary here, which is always the ideal opportunity, the ideal area when it comes to downtrends and U-turn setups like this. However, if that proves to be too far, because if the market closes at this area here at the 10083 area, then we're talking about a stop loss of close to 60 pips. Now 60 pips is outside our 40 to 45 pip stop loss maximum. So that would leave us with one of two options. We could either place a stop loss here and hopefully hope that the market pulls back enough to allow us to enter at a price that beats our stop loss rule, or we could take a look on the 1-hour chart to see if the market would have formed a strong stop loss area on that time frame that would justify placing our stop loss area to protect our trade. So those would be the two options that we would have in terms of taking advantage of this U-turn and this expected bearish movement. So the first thing I will have to do is to wait until the market forms a bearish signal here, which could take place in the next several hours at 8 p.m. Eastern Standard Time, or at 12 a.m. Eastern Standard Time, or at any other 4-hour intervals between now and the end of the next trading session, the next US trading session on Tuesday. So once the signal is given, the next step would be to go on a 1-hour chart to determine if there's a strong enough stop loss area that is strong enough to justify using it to protect our trade as the market continues its bearish move. So again, we're seeing an example of the market providing patterns that indicate the formation of a consolidation setup. These candlestick patterns are very common across the currency market, and they generally give us a heads up that the market is going to be forming a consolidation setup, either in the form of a pennant or a range. And so once we're able to spot these waves, these bullish and bearish waves, they allow us to predict the formation of consolidations, as well as to take advantage of these waves by trading them as long as the signals provided are strong and we have good stop loss areas to take advantage of these movements. So this is a snapshot of the trading manual where I speak in detail about these types of setups and the waves that lead to the formation of these consolidation boundaries. So we're going to be waiting until the market provides us with a signal on a forward chart to take advantage of these movements on the daily chart. Once the signal is strong enough and we have a good stop loss area, then we should be able to take advantage of this movement by capturing a strong trading